In the previous video, I mentioned that after Modi was humiliated by Trump, he sent his servant Jaishankar to improve relations with China, only to be met with cold indifference from Chinese Foreign Minister Wang Yi. However, India subsequently sent delegations to China twice within a month, achieving progress. Chinese Foreign Ministry spokesperson Mao Ning stated that she agrees with Prime Minister Modi's idea of benign competition between the two countries rather than confrontation, expressing willingness for the dragon and elephant to dance together. Yet anyone with slight research knows that the relationship between China and India is hard to mend, and benign competition is merely a temporary strategy. Modi is eager to repair ties with China because a series of diplomatic failures has plunged India into a dangerous situation. Not only did the Trump administration completely disregard India, but Russia also grew dissatisfied with India due to its betrayal, leaving India's relations with several major powers ruined by Modi. Facing Trump's tariff stick, Indians find themselves powerless to resist. India's economic growth has noticeably slowed, with its stock market down 20% from last year's peak, evaporating $1.3 trillion. Massive foreign capital has fled, and the Indian government's debt crisis is emerging, with high annual interest rates making fiscal balance hard to sustain. Major projects spearheaded by Modi during his tenure have bred widespread corruption. These projects cost enormous sums, deliver poor quality, fail to drive economic growth, and generate returns far too small to repay the hefty interest. The U.S. is not only India's largest source of trade surplus, but also the top destination for Indian immigrants, with substantial dollars remitted back to India annually serving as a key tool for the government to maintain trade balance. Additionally, India scams billions of dollars from the U.S. each year, exceeding $10 billion. And the U.S. is the primary client for India's IT outsourcing, call center businesses, and other service industries. If Trump decides to punish India, the consequences will be dire. Losing the U.S., India's most crucial financial backer, would leave India unable to afford its annual $100 billion trade deficit with China. Without Chinese industrial goods and components, India's modernization would grind to a halt. In the final days of the Biden administration, Wall Street began positioning to short India. The U.S. accused Modi's key supporter Adani of massive bribery, filing multiple charges against him, directly slapping India in the face. Meanwhile, major U.S. rating agencies downgraded India's credit rating, and Wall Street giants shaped market sentiment to bet against India, reaping huge profits. India's government, riddled with scandals, has consistently harassed and fined foreign companies investing in India without exception, fostering widespread discontent and eroding confidence in India's future. This has driven significant foreign capital outflows, greatly aiding Wall Street's shorting efforts. In terms of foreign direct investment, China's scale reaches about $1,600 billion, showing strong resilience. Brazil attracts $620 billion, Mexico $530 billion, both surpassing India's $450 billion. This clearly reflects market sentiment, as Brazil and Mexico, with far smaller populations than India, secure more investment. China is not only the world's top recipient of foreign investment, but also one of the largest global investors. The investment capacity of China's government and companies far outstrips India's, so China's actual investment scale utterly crushes India. Vietnam, with a population just 1/10 of India's, secures $230 billion in FDI. More importantly, Vietnam, Indonesia, and other ASEAN countries have deeply integrated their industrial chains with China through RCEP, catching the last train of industrialization. Indonesia's per capita GDP is twice India's. It is closer to China, and its population and land area are substantial, making it a likely candidate for the next growth hotspot. ASEAN, with less than half of India's population, boasts an economic output exceeding India's. Countries like Malaysia and Singapore occupy key positions in global mid to high-end industrial chains, leaving India struggling to compete for a favorable spot in global supply chain division and facing further marginalization. Worsening the situation, Modi's ignorance and short-sightedness led India to opt out of RCEP, allowing its companies to grow in a high-tariff greenhouse, lacking competitiveness. Even if India joined RCEP, it would struggle to rival ASEAN nations. Such foolish blunders are just Modi's routine. Under his leadership, India is becoming an economic, diplomatic, and cultural island globally. Its per capita GDP has been surpassed by Bangladesh. Its relations with all neighboring countries are poor, and its future looks bleak. Indian media constantly boast that their economic growth rate outpaces China's. They completely ignore that China's economy is 5 times larger than India's. And for India to achieve industrialization and modernization like China, it would need to replicate China's peak annual growth rate of 14%, not the current 6% to 8%. In reality, India's economic growth is inflated with moisture. Modi revised the GDP calculation twice, including cow and sheep dung in the GDP, becoming a global laughingstock. His unhealthy borrowing model has saddled India's finances with a massive burden, hard to sustain. A financial collapse would plunge India into severe recession, completely squandering its chance at industrialization. When China's stock market hit a low, Indian media frantically hyped China's imminent collapse, touting India's booming stock market as proof of a bright economic future. Indians fail to grasp that a nation's economic strength stems from robust manufacturing and domestic consumption, not the false prosperity of stock markets. In today's era of escalating global trade wars and intensified competition, squeezing out moisture from the economic structure is essential for healthy operation. While China deflates its bubbles, Indians revel in fake prosperity, missing the boat on nearly every critical industry. China dominates cutting-edge sectors like electric vehicles, power batteries, drones, robotics, shipbuilding, and chip manufacturing. And in software fields like AI large-scale models, it has gained the strength to compete head-on with the US. In future development, China's economy will exhibit greater resilience and more stable sustainability. Now, global media hype that Chinese assets are undervalued, abandoning India for China. Yet the Chinese are not swept up in this hot money influx, turning frantic. Instead, the Chinese government has responded calmly, stabilizing exchange rates and stock markets to avoid being harvested by foreign capital for fake numerical prosperity, as India has been. Such mature responses require long-term experience, not built overnight, which is precisely what India's government lacks.